My name is Matt Neal. I'm the senior reporter and data analyst over at reinsurance.com, and I'm going to be your host for the rest of the afternoon as we get stuck into the details of InsurTech, blockchain, and everything in between. So firstly, thank you very much to David and all the speakers for getting us warmed up, for David for running us through blockchain. Hopefully we've all got a bit better idea of what we're here to talk about here today. And then we can get stuck in right into the thick of it and see just how this technology is going to affect all you guys right here from the global insurance reinsurance industry. So firstly, just let me introduce everybody on stage with me here today. To my right, we have Anthony Belfiore. So Anthony is Aon's Chief Security Officer, joined the company in March 2015, also serves as a member of the Executive Leadership and Enterprise Risk Teams of the firm. In this role, he's responsible globally for physical security, cybersecurity, IT risk, fraud, investigations, and business continuity across 120 plus countries. Next over here, we have Arun Balakrishnan, CEO of Xceedance, our partners today. So before founding Xceedance, Arun served as the Chief Executive Officer for Berkshire Hathaway Insurance in India, before which he founded and functioned as Chief Executive Officer for an insurance aggregation portal company, which secured venture capital funding from one of the top internet companies in India. Next over, we have Arthur Whiteman, PwC. So Arthur Whiteman's territory leader for PwC Bermuda, and also leads the markets and the insurance industry sector for the region. PwC accredited transaction services partner. He forms part of their global insurance and reinsurance leaderships, and he's worked with global companies in Bermuda, UK, continental Europe, and in the US. And lastly, over here, we have Todd Link, Senior Vice President, Chief Operating Officer, and Chief Financial Officer of Berkshire Hathaway Specialty Insurance, responsibility for operations, systems, administration, and finance. Before joining BHSI, Todd was Senior Vice President and Chief Finance Officer of Lexington Insurance Company. And before that, he was CFO and Chief Compliance Officer at MPM Capital, a dedicated life sciences venture capital firm. So, guys, welcome on board.
Thank you.
Very nice to have you with us. What we're going to talk about is the InsurTech environment in 2018 and how blockchain fits into that broader picture of where we stand with InsurTech. And I know that there's been a lot of talk about it over the last 2 years. InsurTech has suddenly come from being two separate words into a compound, which I think is the real sign of emergence of new technology, would I be right? But I wanted to go firstly to Arun. So what does the InsurTech environment look like now in 2018? I know you've been around. I mean, you were probably one of the original InsurTech companies before the phrase was invented. And so what's your take on how the environment is where we stand now, and where does blockchain fit in with this sort of explosion in interest in tech and insurance?
Thanks, Matt. Well, if you look at the InsurTech world as we stand today, we can broadly define it in three main categories. Right? There's one segment is what we call complementers. So these are ventures which are going to augment what the insurance carriers are doing today. So let's take, for example, insurance aggregation websites or things like that. Then on the other hand, you have competitors. So these are InsurTech startups which are competing against insurance companies with new business models. There's pay-per-mile, which you might have heard of. There's on-demand insurance, peer-to-peer insurance. So there are a lot of companies being set up which are going to compete with InsurTechs, with insurance carriers today by innovative business models. And the third segment would be categorized as catalysts. These are firms which are focused towards helping improve the way insurance business is conducted, right? So when you talk about the operations world, the technology world, how we underwrite, so it's serving as catalysts for the existing businesses. So if our view is blockchain necessarily would fit into the third bucket, right? I mean, today I think one of the biggest things in the insurance market is the leakage we have when it comes to expense ratios. It's very expensive to do businesses, and there's a lot of market-based inefficiencies with the same companies, multiple companies doing the same work, challenges across reconciliations, a lot of money being spent on the back-end side of things. So in our view, blockchain has the potential to disrupt that side of things. And just from it's unfortunate, but innovation follows money, or money follows innovation. That's a bit hard to guess, but as it stands today, most of the venture capital money which is getting funded, which is funding InsurTech ventures, there's a disproportionate amount which is going towards marketing and distribution-based startups. So new distribution models, things like that. So that landscape, in my opinion, it doesn't work in the most favorable way for us as an industry. But more to follow on that, right? And blockchain today, in our opinion, impacts most on the support side of things for insurance companies, not as much on the distribution side and placement of business, but in time that's sure to follow as well. I hope I covered what you were focusing on.
Absolutely. Arthur.
Well, thank you for the opportunity. The industry has moved a long way, particularly over the last couple of years. 3 years ago, if you were having discussions with executives, there was something of a nervous chatter around blockchain and its application to the industry. Things have moved on very significantly. If I quote a few survey findings of ours, just to contextualize the point, I think, we had about 56% of insurance executives who say they recognize the importance of blockchain. And this is a fairly recent survey, about 6 months ago. 57% of them didn't know quite how they would apply that technology. That feels about right for now. 2 years ago, that would have been a very different story. The survey also looked at how executives were engaging with the technology marketplace, and 46% of them say they were already engaged with a tech partner. I think what is quite profoundly different, certainly over the last 24 months, is if you look at the number of internal venture capital funds that are being established within global insurance and reinsurance companies to specifically focus on technology. That's a very different place that we're in today. So I think there's a very different understanding, different awareness, and very clear focus on how to try and leverage this technology to do things like disrupt the distribution chain, take out some of the frictional costs within the industry. There's just a very high expense ratio within the industry to go from initial contracting to the conclusion. So I think those are some of the sort of data-driven points that are pertinent to just sort of contextualize the panel here.
Todd, obviously, from your perspective on the operations side, this is something that could really be a game changer, especially with blockchain and with tech more generally. How do you view it, and how do you view how the phenomenon has developed from sort of on the fringes to being, no, this is a core part of the discussion now?
Yeah, thanks, man. I think to answer the question, I'd perhaps just provide a little context with regard to who BHSI is, right? So Berkshire Hathaway Specialty Insurance. We just celebrated our 5th anniversary at the end of April. We were a de novo organization 5 years ago, right? I walked into the job as a chief operating officer, chief financial officer, into an empty conference room with no tools, no computers, no phones, no pens, no papers, right? So in much respects, we had a tremendous opportunity because we had no legacy systems, right? The industry is just wrought with tons of legacy problems. We had a whiteboard to build an organization different from everybody else, right? And so a big part of it was what I call people, process, and tools, right? And so we partnered with the right teammates. Xceedance has been a big part of that. Xceedance is providing a lot of the operational IT support for the organization. And we've really focused on things in the InsurTech world around optimization, right? I call it the efficient frontier, getting the most optimal outcome for the lowest level of risk. And so things like artificial intelligence, robotics, machine learning, is really where we've been making our investments from an InsurTech perspective. It's really driving to the expense advantage that we've been talking about, right? And so, it's a key component of the DNA of Berkshire Hathaway Specialty Insurance, and we'll continue to focus on the opportunities in InsurTech. Our approach, though, is we're not going to be the first mover. We're going to be a fast follower, and it's really rooted in we got to get it right. The IT build is a critical body of work for us. It creates a very significant competitive advantage. It drives to that expense ratio advantage, but it's not something that you want to do twice, right? So we'll continue to follow the landscape. Blockchain, in particular, has a lot of compelling use cases. David and I had a conversation at lunch, something we might discuss, but we're going to dip our toe in the water in a very thoughtful way.
Anthony, you bring a slightly different perspective here when you have the security angle for what you can do with tech and what you can do with blockchain specifically. From you guys and over at Aon, how are you looking at blockchain and InsurTech more generally as the main thing for you guys to use?
Well, I think the way we're looking at it right now as an enterprise is that it's probably the most disruptive thing we've seen in a long time in InsurTech, right? That's pretty intuitively obvious to everyone. But one of the things that you realize when you're one of the largest brokers, well, if not the largest broker on the planet, is that change in the insurance industry does not come fast. And many of you know this, right? So any of you have had the the honor of going over to London, and I'll never forget, I joined Aon. My last security gig before this, I was a global CISO for JP Morgan Chase. I was in financial services. They tend to be about, I'd say, 10 to 15 years ahead in the technology life cycle than insurance, from what I've been able to garner in my 3 years here. But I'll never forget the first time walking into our cheese grater building, Leadenhall, over there across the street from Lloyd's, and I'm seeing these guys carrying binders of paperwork all across the street to Lloyd's. I'm like, what is he doing? It's like, oh, he's going to do a deal. He's going to go sit at a desk and cut a deal. And I'm like, you guys still use binders to do deals, right? So the interesting thing for me was like, wow, this is ripe for technology innovation and ability to kind of become more efficient and more optimized in our operational models. The challenge we have right now is that, it's kind of like, token formats and valuations and regulators, oh my, you're kind of like, how do we start to look at the discrete use cases that make sense? What are the ones we go after, whether they be front office or back office, right? Whether front office client facing or back office operational, efficiency gaining. And where do we pick our spots, right? It's a very compelling thing to say we can cut out the middleman in a process, right? And just get from point A to point B in a much more efficient way, right? And the challenge we're having right now is that there is so much disruption. There are so many ideas, and what's the first spot? Much to the point these guys are making here, there's risk with there's opportunity with being the first one in, but there's also risk, right? And because a lot of the regulatory frameworks and overhead have not been flushed out yet, because of the fact that most of the use cases that people have been seeing have been related to digital currencies, and there's a whole microcosm issue just around valuations and linkages of token to underpinning value propositions. There's things there that make legal teams, risk teams, security teams, operational risk teams nervous. And so we're definitely embracing it. We're definitely pushing hard. We want to be at the front of the line. But again, it's probably going to take, this is one of those where it's going to take a village, an ecosystem of partners and professional services firms and tech to kind of bring to bear the right set of variables and constraints on the equation to box this thing and manage it.
Anthony, if you don't mind, I had a question just in that context. Is if you exclude all the benefits of blockchain, right? I mean, all the things about just focusing on the security part, right?
Yeah.
How big a problem for you is security today, and how much do you think this can solve that? I'm just talking from that as a benefit.
The interesting thing, right? So depending on the attribute model you leverage in your blockchain, whether it's a public blockchain, private blockchain, what data is actually hashed and what is contained in the trees. Blockchain itself is actually a very secure platform in terms of the ledger and the chain itself as an authoritative source of data, as something that we can share, that we can leverage, and that we can validate. Very powerful. The challenge comes in tokens. Right? The same problem we've had from the beginning of time, and whether they're tokens that represent some monetary value or tokens that represent some contractual value, or, I don't know if you guys understand how Bitcoins work or digital currencies. A lot of them today kind of work like bearer bonds. If I have it in hand, it's mine and I own it and I can use it, right? That's a challenging paradigm for us to kind of tackle and wrestle with when we're looking at building out large ecosystems of any type of valuation that is predicated on using ciphers and digital keys that have to be stored, and God forbid someone forgets the password to a wallet, or someone loses the USB stick they're on, or they printed them out and have them under their mattress and the ink wrote off on the queue. There's some challenges there. So the biggest challenges we're looking at in terms of the technology is not the blockchain. Blockchain's awesome, right? And actually, I'm kind of old school on this because I come from a government background in intelligence services and things like that. But we've been using encryption and ciphers and hash and asymmetrical encryption for literally 40, 50 years effectively, guys, right? So the challenge here is that now we're branding it with blockchain, we're leveraging hashes, leveraging the technology is phenomenal, but we still have the weaknesses in core asymmetrical encryption schemes around private keys and values, and how do we manage that? And what are we doing? We're going old school. We're building bunkers. We're building, guys with M4s and closed circuit TVs and two-party key control, and it's kind of surreal that we've gone full circle on this when we're leveraging one of the most innovative technologies on the planet. So something to think about there. So that definitely tempers the kind of our ability to leverage or embrace the technology as rapidly as we'd like to, because you got to factor in the risk.
What is it then, just to come back to Anthony's point about that in your experience in the banking world, there may be about 10 to 15 years you said ahead in terms of adoption of new technologies?
Totally.
Or to your point then, why is it that in the insurance industry, in the reinsurance world, that there is that sort of more reluctance to take up these types of
Well,
tasks?
I think I actually can answer that really simply. I'm sorry for jumping in, guys, but the regulatory environment, New Yorker, sorry guys, it happens. Italian guy from New York. So the regulatory environment in insurance has not been where financial services were. We probably had the most rigid, draconian set of regulatory overhead once SOX came out in the U.S. Once domiciles like Singapore and the MAS started really enforcing things, once the FSA in Japan really got on their horse, and the PBOC in China,
Don't forget APRA.
Yeah, exactly. All the discrete FCA now, everyone is kind of jumping on board in the financial services space post the mortgage crisis, right? Post subprime, right? LIBOR, subprime. There was a litany of things that happened that got us in some hot water. Other than Spitzer in the U.S. and some of the stuff that went on there, the insurance industry really hasn't had that catastrophic event yet that's forced the regulatory regimes. Yeah. These are the type of disruptive events that I think are going to kind of speed up the regulatory overhead that's going to come with the space. So, I don't know, you guys have a view.
Why don't you?
Yeah, I mean, Anthony is exactly right. I mean, the other view I would share is if you look at the industry as a whole, certainly on the commercial property and casualty side of the business, historically, the large insurers have been reluctant to invest in technology. And it's as simple as that, right? So it's, what I like to say is there's this view that you can take the field of dreams approach, right? Which is if you build it, it will come, right? No insurer wants to do that because you're going to invest in a tremendous amount of money and time and effort in building a platform before you have revenue to support the platform. So what happens is, as an industry, certainly from an operational IT perspective, you're very reactive to the business. And so as the business grows and moves into different directions, you simply throw a solution at it, right? And so what the large insurance companies typically land is they have multiple policy systems, multiple claim systems, none of them speak to each other. You don't have one source of the truth, and you have a gigantic spaghetti ball that's really hard to manage, and it makes guys like Anthony's job really, really hard. Yeah. Doesn't help my job so much either. We've tried to avoid all of that at Berkshire Hathaway Specialty Insurance. Our approach has been one source of the truth, one policy, one claim system, integrated in the cloud, downloaded into our corporate record, which is our enterprise data warehouse, right? It's a lot easier said than done. But that's a big part of this, which is a holistic approach from the top down, understanding that IT operational efficiency is important, and it's a priority in the organization. It's a rarity, and there's a reason why there's a lot of large insurance companies that are going through remediation and spending tremendous amounts of time and effort to really get to a streamlined operating model, which, in my estimation, they may never be able to get to. So,
I mean, I think that's right. I think we would also look at this as the nut needs to be cracked by a huge amount of collaboration, and that's amongst carriers. It's amongst other experts, including the technology industry, and that. Whilst there is evidence of some of that having happened over the past, that sort of wholesale collaboration is a big step change for the industry too. And once some of that starts to happen, then the speed at which the technology will ultimately get applied will increase.
But one of the things I might disagree a bit on is I think historically probably yes, in the insurance industry has lagged. I think it's changing. Right? I mean, I just see a difference. But in my opinion, I think it's a bit more systemic. If you look at the early 2000s up to mid 2000s until 2008, I think the brightest minds in technology world or who came with the right experience were either attracted by Wall Street or the Silicon Valley world of technology. Right? Insurance industry is facing a bit of a challenge for attracting young, smart technology talent. And what has happened is the people who did make it are now reaching a decision-making level in most of these insurance carriers and organizations, and we're seeing them being more receptive to this. So I'm seeing a change, but the gap we have is because of primarily how we are attracting the talent to the insurance industry. So we need to do something as an industry to attract. In my opinion and experience, I think Bermuda actually attracts good analytical and technology talented associate for the insurance industry. It can't be necessarily the same thing for across the world. So we need to solve that as well.
And I would agree with your comment about Bermuda. If you look at the sort of data analytical approach to catastrophe reinsurance, that has fostered a lot of investment and attraction to talent. But again, I don't want to be the boring data guy, but one of our other surveys spoke to the insurance industry as being one of the least attractive industries for any college graduate to enter.
Yeah.
And again, there was
We all know that.
diversity between women and men. It was even considerably worse for women entering the industry. So there is an issue with
Yes.
the issue, and yet the issue serves one of the most societally important contributors to the functioning of the capital markets and society as a whole.
But now those people are sort of with InsurTech coming into center stage, right? Since about maybe early 2016. Now that people really are paying attention to the industry, how imperative is it for the incumbents to respond effectively if they want to keep their position where they are? Right?
I think it's incredibly important.
Yeah.
And I think what we've also seen change is how digital strategies and technology strategies are right up there amongst the other core strategies of businesses. So boards are now starting to talk about these technologies. Boards are obviously talking about cyber, not just from a threat perspective, but cyber from the underwriting perspective. This is again a step change in the industry. And I think with that shift in the strategies and the purposes of the organization, then you start to get a flow of talent into the companies.
Yeah, and I would just simply add to the comment. David had a cartoon picture of a caveman at a keyboard, right? I mean, that's historically the way the insurance industry has worked, right? An underwriter simply would work in a silo environment, not with a smart workstation, and they would do things the way their fathers did it from an underwriting perspective, right? As I said earlier in my comments, we've had a unique opportunity that we don't have legacy systems. So the tools that we're empowering our underwriters with is a very, very different job than what they had in their previous employers, right? And so innovation certainly is critical to success. Applying the tools and the opportunities that are in the space in the most efficient and effective way is the only way, in my estimation.
That's something which is a bit of a challenge as well, right? I mean, if you look at some of the InsurTech startups, and a lot of them which are well funded, many of them are not even from the insurance world, right? It could be argued that's a good thing, but let's face it, the industry is something which the best innovation will come in from within. So if incumbents and people who are already in the business, they are the best drivers for InsurTech investments, which probably is not the case today. I think we need a bit more of it than what is actually happening. Some of the companies, like as you mentioned, some of the large brokers are quite ahead when it comes to making these investments, making some of the internal investments, the VCs. But if you look, I don't have the exact data around it, but I really think a lot of the InsurTech money which has been invested in has actually gone to people who are coming in from the outside. And they might have a different perspective, but I would rather back our team as an industry collectively rather than people who don't have that.
I mean, I would agree with that point. Certainly, in its infancy, we were seeing essentially, right, we can spend this money outside with this party, they can come and help us. And we are actually seeing a shift in the industry to have core teams, the talent within the organization, the investment within the organization. These venture capital funds are a big part of that.
Sure. Just where I now, I wanted to actually open up to the floor and see if we have any questions as well for our panelists off the back of what we've been talking about today. Anything from the audience? Brilliant. One over there first. Go ahead.
So yeah, one of the jobs I do is raise capital for specific blockchain projects. And one of the hurdles that I regularly come up against, especially when I'm talking to investors from the insurance industry, is by the time you apply the blockchain principles of truth and fact and remove the insurance principles of promise to pay, is it really insurance?
If I understand you, effectively really what you're saying is you're changing the character from risk transfer to a financial guarantee. Effectively, I believe it's what you're saying, right? Which is the core premise of what insurance is about, right? And so, there's a whole bunch of IFRS and GAAP rules around risk transfer versus financial guarantees. And, look, we as I said earlier, we're dipping our toe in the blockchain pond, if you will, and it's very early days for us. But the way in which we would enable blockchain is around operational efficiency. It would not change the terms and conditions of a contract, right? And so the terms and conditions of the contract are going to dictate whether it's risk transfer or a financial guarantee, right? And so the way I look at it, it's an ecosystem around how you transact the business and how you operationalize the business not the actual terms and conditions of the insurance contract. So I'm a bit surprised that you're getting that feedback back,
Yeah.
but maybe you can share some more.
I've gotten some, in certain meetings, so we've had a lot of interesting discussions with our business partners and our clients around this stuff, and I think that there's a couple things. I think inherently when you look at a model that removes, again, at a very simple macro level, we're removing the middleman. Why are banks nervous, right? Why are credit card companies nervous, right? Why are insurance carriers, why are brokers nervous, right? Well, I think we're middlemen, right? We all have some piece of the pie. We make fees, we provide services, we have visibility into the transaction. What happens when it goes from point A to point B? Instead of insurance, I get it through, instead of I get my funding through insurance, I get through alternative capital. What if all those private equity guys out there with a lot of money waiting to spend can actually start to come into these markets in a way that's a little more disruptive than we planned initially, right? And I think these are the challenges that technological innovation poses. I mean, look, guys, I have a brilliant colleague, I'm not going to mention his name, who kind of gave me an interesting example yesterday. He was spot on. He's like, what the hotel industry today does not fight with each other. They're fighting with Airbnb.
Yeah.
Because it's totally disrupted the space, right? I thought it was very, like, wow, that's very telling. And when you think about it, they got rid of the middleman, they go right to the people, and they provide the service, right? And it's very interesting to see those disruptive models scale out over time because they're pretty much infinitely scalable through the leveraging of the technologies they are with cloud and the elasticity and the virtualization and all the different things these guys can provide at a lower price point than we can in our current brick and mortar, distributed server, web-based technologies. It's going to be a challenge. So I think to the initial question, we all better be considering it, or we're all going to be on borrowed time over the next 10 to 15 years, right? I mean, look, we're always going to make money. Insurance is going to be here, guys. I'm not saying it's going away, right? I'm not doing anything crazy like that. But what I am saying to you is market share will be able to be gathered through some of these innovative things. Look, you talk about one of the ones, I get really annoyed. There's this company called Lemonade. Who's heard of Lemonade?
Oh, yeah.
Yeah, everyone likes Lemonade. Great name. I'm going to start a company called Apple Juice. I don't know, but I was just out in Silicon Valley, and I was, there's an area in Silicon Valley known as Sand Hill Road where guys like us get to go and you meet with all these VCs and they pitch you on things, and bankers from your old jobs pitch you. And I met this company Lemonade again, and we're looking at them and a bunch of other things. And you know how much premium Lemonade booked last year? Like real deal recurring premium?
A couple of million.
Tiny.
No, like $2 million.
Yeah.
$2 million. But yet, like, everyone is like, this is the greatest thing ever. They're losing, they lost like 22 million last year or something on their books. And I'm in this thing, and but the marketing, to your point, like all these marketing and all these things going on there, you know what? It starts as noise. The thing we got to be careful with is that if it ever does catch on, their platform, again, is ridiculously scalable, ridiculously efficient, and can drive real nice margins if it actually ever took up at scale. So we got to start looking at this stuff. I'm sorry.
I'd agree. The great thing I think about what we're talking about here today is if you think about the societal importance of what the industry does, and you think about the huge amount of underinsurance or no insurance, frankly, within the globe, and you think about the role that a CEO plays, which, frankly, a large part of it is monopolized by worrying about how an organization is malfunctioning as opposed to functioning. There is a tremendous opportunity for all of these zero or low value added activities to be taken out of the consideration of executives so that smart people who really do understand risk management, risk taking, underwriting can spend far greater proportions of their time with the technology and the analytics to make better underwriting judgments and actually innovate to try and find ways to insure things or people or places that aren't insured at the moment. That, I think, is the real opportunity with this technology advancement.
Any more questions before? One just over there.
Everyone talks about disrupting the middleman, the broker. Is it not equally as worrying for the underwriters, the underwriting panel, to have the disruption on that side of the capacity and perhaps be able to syndicate that on the P2P market sharing on that side? Is that not a concern as well? The broker being involved?
Yeah, I mean, look, Anthony just touched on that a moment ago. Here's what I'll tell you. Insurance has been around for thousands of years. It'll be around for thousands of years more, right? That's not to say insurers will be around, right? The carriers need to be innovative. They need to compete. And so, a follow-up to Anthony's comments a moment ago around Lemonade, if you think about what's really going to transform the way in which we all conduct business, I think the best example to look to, in my estimation, is look to what the investment world did, right? They moved to the DTC, right? And so DTC became a common platform, think of it in terms of ISO, where everybody has to transact in the exact same way, right? The way we transact is we have relationships with Aon and Marsh and JLT, and we receive submissions in hundreds of different formats, right? It's highly inefficient. And so the things that we're currently doing is we're trying to create optimization based off of this suboptimal model, right? And Anthony's point's the right point, is if we all go to a common homogeneous platform where it's straight through processing, right? Very little human touch, there's winners and there's losers, right? What that will mean is the brokerage fees will come down more likely than not, right? They'll become more commoditized. Things like capital will mean less, right? Expertise will probably matter more. I think the brokers will become more, in my estimation, more of an advisory service than a transactor of business, but we'll see where it goes. But in my estimation, that's where the marketplace, the insurance marketplace, will really transform, is if you get to this really kind of common platform.
I second that, and the one thing I would say is I don't think the brokers are going to get disintermediated. I think the role is going to evolve. Personally, I think there's a lot of, you just imagine one submission goes to 4 underwriting companies, 60 to 70% of the work being done by underwriters across all these companies is fairly consistent. I think the role of the brokers is going to evolve more towards not only being market makers, but also price makers. So to a fair degree, some underwriting would be expected of that. So I agree with you. There is some disruption, and probably more disruption going to happen on the underwriting side with people who kind of holding on to, okay, this is our subject matter knowledge or whatever, but really a lot of the work on a day-to-day basis the underwriters are doing is machines can do, technologies can do. The AI, InsurTech investments are facilitating that. So the underwriters who truly understand and are experts at that particular line of business would be valued, whereas a large part of the work which either the machines would do or the broking community can do it for them would change a lot. So
we've got time for just one more question, which is straight in the middle of the microphone.
Thankfully, we still operate in the subscription market on a lot of the placements that we write. And there's a lot of underwriters in this room today, and I would imagine if you gave the same risk to all of them and asked them to price it, they would all come up with very different answers.
Absolutely.
So I'm not sure, and because we're all using different tools, and we all have different return hurdles, and we all have different elements driving our companies.
Absolutely.
We all come up with different answers. So I'm not sure. I think there's a space for both in the
Agree
market,
with you.
and I think there's some transactions that will benefit from this, but there'll always be a place for the broker. And there'll always be a place for opinion in our industry.
I agree with you. I mean, just to clarify, I think it's all inverse with the how homogeneous the nature of your business is, right? By definition, if it is very heterogeneous, then exactly a point, right? Everybody will have a different answer. That's by definition. The more homogeneous lines of businesses, that's wherein machines and things might have a higher degree of role to play. So this audience might not be the best example for this because the nature of the risk you look at is very different, right? Mm-hmm. So, but on a broader scale, small and medium commercial businesses, that might not necessarily be the same case. So that
I think it all comes down to how efficiently you use the intellectual capacity that exists within the industry.
Yeah.
It's not about completely disintermediating a human being from the equation. That's quite the opposite, I think, of what is being discussed here.
I think that about wraps us up just for this panel. I'd like to invite everybody to have a big round of applause for all our first panelists, please. Very good. Thank you. Thanks, guys. Thank you.